Good afternoon and welcome to the ASEAN Midday Market Watch. Our guest today is David Kuo, founder of the Smart Investor in Singapore. David, great to have you on the show.
Yes, good afternoon, Brian. How are you?
I'm good. How's the new year been for you so far?
So far, so good. I think everything is going according to plan, pretty much so. The stock market is doing reasonably well, and I think most of the stocks that I've bought so far are performing in line with expectations.
All right, so we're going to come back to that, but first let's take a look at how markets have been performing this morning. So if you look across the region, Asian markets are mostly lower. We start with the Nikkei and it's at 28,588.98. It's down 0.38%. Shanghai is down 0.53% at 3,543.96. The Hang Seng is pretty much unchanged at 28,496.98. The ASX 200 is up marginally at 0.26% at 6,732.50. The Kospi is down 1.4% at 3,105.80. Over closer to home, we've got Bursa Malaysia, which is down 0.24% at 1,631.83, and rounding it off, we've got the SGX, which has breached the 3,000 mark. It is up 0.3% at 3,008.9. Now, David, you said your stocks have been doing pretty well so far this year, but what will the impact be of the 1.9 trillion stimulus rescue package that has just been announced by Vice President-elect Joe Biden? How will that have an impact on your various portfolios?
Okay, Brian, let's just call it 2 trillion, right? I think the reason why you said 1.9 is that 2 trillion just sounds like an awful lot of money, whereas 1.9 sounds
yes, it is an awful lot of money.
It's still a lot of money, but I think it is only to be expected. We need America to pump money into its economy. The people in America are suffering at the moment. They need stimulus, and also they need the vaccine rollout. I mean, that is going to cost a lot of money, and they also need some kind of infrastructure spending. So when you take it all together, America needs to move forward. They need to put the Trump era behind it and say that now is a time in which we're going to need a lot of stimulus. If you have a look at the stock market, this is a conundrum that people have. You look at the stock market and it looks absolutely fine. But I think if you look on the high street or Main Street in America, it tells you a completely different picture. And I think this is the same thing that is going on all over the world. You look at Japan, 30-year high. You look at many of the stock markets around the world, they seem to be doing okay. So I think there is this bifurcation at the moment, this K-shaped recovery that people talk about. Certain industries, certain sectors are doing exceedingly well. Then you've got the other leg of the K, the one that's pointing downwards, and there are still lots of people suffering. So I think it is only to be expected that America needs to pump this money in. And when you say, how is it going to affect my portfolio? I think that this was one of the pillars of my thesis for 2021, and that is that a lot of stimulus is going to be required by America. There's going to be a lot of catching up that's required. It's going to require printing a lot more money, and I think this will depress the US dollar for many of us watching America. I know every now and again the US dollar will go up, but ultimately over the whole of 2021, you've got this this budget deficit that is going on in America. I mean, this 1.9 trillion doesn't actually come cheap. You've also got the trade deficit going on in America, with Americans still buying cheap goods from Southeast Asia. You've got low interest rates, and I don't think any of this bodes well for the US dollar. And as far as portfolios are concerned, if you are exposed to American companies that have exposure also to Asia, I think those companies will do well, because as they make the money in Asia, repatriate it on their balance sheets, on their profit loss accounts back into America, it will make these American companies look as though they are doing exceedingly well, which they are. And so is it going to affect my portfolio? I think positively rather than negatively, Brian.
Yeah, and the likes of probably Apple and Nike, for example, which have literally revenues across the world, that foreign currency translation back into US dollars is going to have a significant impact on their bottom line.
Oh, absolutely. And if these things are priced in US dollars, it means that as far as we're concerned, you buy something that is priced in US dollars when your own currency is going up, whether you are holding, say, Malaysian ringgits or Singapore dollars or even Chinese renminbis. When you convert that into US dollars, you go, gee, that was ridiculously cheap. Let's go and buy more of that. Yeah. Instead of buying one iPhone, I'm going to buy two. Well, not really, no, because even one iPhone is quite expensive. But when you
yes, it is.
But when you translate that back into US dollars for the American corporations, it will look exceedingly good.
Now, David, moving on to the fact that your stocks have done well, as you've mentioned, the Smart Investor talks about 3 growth companies in your that could double in 2021 and beyond. Could you share what these 3 stocks are and why they've been picked by the Smart Investor?
Okay, now, first of all, I want to say that I didn't write this article, and I hate predictions like that, but I can understand the sentiment behind these articles, right? What they're saying is that certain companies that are relevant to people, and I think that is really the key word for 2021, relevance. Whichever business you are running, it's got to be relevant to people. And these 3 companies are, in no particular order, you've got Nike, you've got iFast here in Singapore, and you've also got Starbucks. So you've got 3 companies. Are they relevant to people? Well, I think Nike is, because people, if they're going to be working from home, they're going to be wanting to go out and exercise a bit more. And so therefore, you've got this company like Nike that makes good training shoes, good shoes for people to go out running in. So that's relevant to people. Then you've got iFast. I mean, iFast, unfortunately, didn't win one of the virtual banking licenses that was up for grabs here in Singapore. But that is not going to put itself back. But as far as the relevance is concerned, people need to invest their money, Brian. People need to put their money to work. And obviously, they can come to the Smart Investor and look at some of the recommendations or some of the stocks that we like and go out and buy them. But in general, people are quite lazy when it comes to investing. They'd much rather go and give it to somebody else to manage. And I think, this is where companies like iFast with the big swathe of exchange-traded funds comes in. People like to be able to just continually invest money in those products. Then you've got Starbucks. Is that relevant at this time? I think people do need a little bit of guilty pleasure once in a while. They like to go out and buy a cup of their chai latte or their macchiatos or something, and it's an affordable product. So maybe it'll cost $4 or $5 for a cup of coffee, but well, people say they can afford it. And that really is my call for 2021. Look for companies that make things that people can't do without, or the things that people can easily afford. And if you go and look at that, then I will think that you won't do too badly, because we're still going to be in some kind of economic doldrums, even though the economic numbers may say that we're doing fabulously well. But I think a lot of people will feel that they're not doing that well. So look for those companies that do well in recession. I'll give you one more, Brian, right? One that I'm actually running the slide rule over at the moment. It's not on that list of 3. And the one that I really like at the moment, they came out with results yesterday, and I do own shares in this company. It is Fast Retailing. They own Uniqlo. And
Uniqlo.
Yeah, have a look at those results.
I'm a big fan.
Well, have a look at those results that came out yesterday. I mean, their profits were up 23% compared to last year. And last year, we didn't even have a pandemic. So how on earth did this company manage to make 23% more profit than this time last year? Extraordinary, isn't it? And it's partly because, they make the things that people want. I mean, they make things like comfortable clothing, stretchy pants, and comfy shoes and comfy pants that people need to wear all the time. So have a look at that company. I don't think you'll be too disappointed in 2021 if you follow this company.
David, thank you very much for your insights.
You're welcome. Thank you.
We've been speaking to David Kuo, the founder of the Smart Investor in Singapore, on BizTech's ASEAN Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations.